Good morning, this is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Friday, the 2nd of January. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after it allowed 24 hours. Right, now, obviously we had a bearish leading day booked for Wednesday, and that's certainly delivered. That got us down to the new monthly pivot area, and that's holding so far with a decent rally. That might hold, but there are prospects for going lower, which I'm going to be having a look at on the RTH charts. On NQ, we didn't quite make it to the head and shoulders. If we get back over the new week, the weekly pivot at 25,802, at that stage the head and shoulders would have failed, and we should go back up into this high. Would the inverse head and shoulders fail in the event that with this head and shoulders made target? No, it wouldn't. We'd need to get down to this line here and beyond it to fail that inverse head and shoulders. So I'm keeping an open mind either way. But it wouldn't surprise me to see this go back up, and I'll be talking about that in terms of the daily middle bands on the RTH charts. All right, RTY, I have drawn in a possible, I've got one on IWM as well, a possible bull flag that has formed here. We actually went down and made a new low for December. Was the last thing we did in December, and this means that we could have. It was the only one that did that, but we've got a decent looking bull flag here, which could deliver. On YM, we didn't go as far as that. If we had an IHS here, which we don't, then that might have failed. But we've got a double bottom here, so it doesn't fail the same way. So this does look still as though, we've still got an open target above, and we've still got an open target above on NQ. ES has already made it. RTY, it fell. That was the IHS there, and that's already gone, and it's made a lower low. All right, DAX and the STX. In what I suspect might be a presentiment of the rest of the year, because the rest of the world handily outperformed the US market. I know everyone's very focused on the US market, but the world, excluding the American market, actually went up about 29%, and the US market went up about 15 or 16, I think. And I'm thinking we're probably going to do the same again this year. I think there is going to be, there's not particularly competent management in the US at the moment. They're using bullying more than persuading, and to be honest, that doesn't tend to work. So there's a sort of slow burning capital flight, which I'm thinking might last all year. We will see. ESDX has also made a higher high and has pretty much made it to the extended target on the inverse head and shoulders, which I was a little doubtful about because really it was a little oversized for inverse head and shoulders, but it has made that target. All right, let's have a look at the bigger picture charts. Okay, now the first thing to say is that we went lower than I expected on Friday, and on Wednesday, and the reason for that was that I was expecting the daily middle bands to hold, and they didn't. We closed significantly below them. On ESTX here, we had closed at 68.92, and that was actually about 20 handles, 18 handles below the daily middle band. On SPX, we closed at 68.45, and that was below the daily middle band at 68.56. And on the Qs, we also broke below with a close quite considerably below, actually, because we started the day at the daily middle band. We closed at 6.14 against 6.18 for the daily middle band. On Dia, we closed below as well. We closed at 480.57, below 481. And IWM, of course, was already below the daily middle band. So that was actually a series of breaks. Now, but the way these breaks work, hey, George, the way these work is that if you are going to reject them, then you'll typically do it the next day. So we might see a strong rally today. And of course, that is what we're seeing. And I'm thinking that might well be what we get here. So this may be a failed break, which would then tend to fail and then would tend to lead to new higher highs. And that is kind of what I've been leaning towards seeing. I was playing around with the 15-minute charts here. I wasn't seeing an awful lot on SPX. But of course, SPX has already made a new high. And here we've got a potential double top, which is what I'm watching here. So mainly I'm watching this rising support from that last low. Looking at the Qs. The Qs, I've got a possible overall. Actually, no, it is a bull flag channel. Now it doesn't need to go and make a retest of the low to confirm that. The question is whether it's going to come back and retest this the flag low, which obviously would be considerably lower. That would be at about 573. Doesn't need to do that. And again, I'm watching the rising support from the last low, which is nowhere near breaking at the moment. But if we were to go lower, that's what I'd be wondering about. We're a long way from failing the IHS here, and this is a nice channel, but it's a nice channel already. So this is a bull flag channel. The question is whether we're going to see a break up before we see a return to test the support. But I was thinking that was leaving it open for a move down. On Dire, we've come pretty close to a test of the target. On here we've got a double bottom, but here what I'm looking at here is a pretty decent looking triangle. Now this could extend into a flag, but I've got to say my lean on this would be that this is a bullish triangle, and that we would be continuing higher. So I would give the odds of this rally continuing today, us breaking back over the daily middle band and then continuing higher into these high retests, which we didn't see in December. I'd give those probably about 75%. That would be my lean for today, but I am considering the possibility that it might not do that. What I would also say is, this is a possible, sorry, I haven't marked it in, but this is a possible daily RSI 5, hourly RSI 5 buy signal brewing. And we've got another one on Qs, and we've got another one on SPX. These are all pretty nice looking buy signals, and these may well all deliver. We will see how that goes, but I'm rather liking that. That would be my obvious lean. If we do see weakness today, and we give away the overnight gains and go significantly lower, then I will be considering the alternate flag scenarios. All right, let's have a look at the IWM chart. Bear with me. All right. All the new monthly pivots are on everything this morning. So and I'm sending out the chart with the morning charts. Okay, looking at the daily chart here, obviously we'd broken below the daily middle band already. We actually reached the daily lower band. And we also reached the 50-day MA, which is a 245.41. This is an obvious area to find support, and I'm thinking we may well find support. In terms of the charts here, I've got two main options here, one of which is a channel and the other one of which is a wedge, and we've reached the first one already. There's nothing really here that supports, this looks like a bull flag forming, and there's nothing really here which supports the idea that we would go down and touch that channel support on the Qs that we're looking at. So I'm liking this, and I got to say, this is holding down to fairly fine level. This is a very nice looking bull flag wedge, and if we went down and touched this level here, that would be a pretty solid looking bull flag channel. But my lean would be this could go straight up from here. Dia could go straight up from here. Qs can go straight up from here too. And SPX. I'm liking the the down day on Wednesday and update today, which gives a lot of that back, and then we go back and resume going for the unfinished business that we are looking for. So we will see. All right, looking at DAX. DAX never got down to the daily middle band, and we've already gone higher. I am thinking we may well see a retest of this high here at 24.8k, and that's looking more likely. Nikkei, we've got this triangle breaking up, and I've got a target there for the triangle would be at 52.6, and I'm thinking that's got a decent shot. I think we're going to see, I'm still looking for those high retests on Qs and IWM and Dia, and we haven't seen them yet, and I'm still expecting to see all of them. Chances are we'll probably see these too. All right, great. Let's have a look at DX. DX, still got a double bottom here. Still waiting to see if that will deliver. We've now pretty much made, not quite, and we've got resistance at the new monthly pivot at 98.22, but we've now pretty much made this IHS target, which honestly I was having doubts about. I'm thinking we could see a sizable reversal here, and there's definitely some support in terms of signals for seeing that. But we need to get over the monthly pivot, and a sustained break back over 98.4-ish could get us back up into these highs. Looking at ZB. ZB, obviously we had a potential level bottom here. It wasn't that great. We've got a decent looking flag channel here, and that's broken down. I'm leaning towards this coming back in to retest the low here, and we may well just continue on the path to, hang on, the large head and shoulder target in the 112.04 area. Looking at ZN, this looks like a bearish triangle. Looks a lot like a bearish triangle, actually, and it's quite a nice one. If that's the case, then we would see a move down to this flag support, then a bit of a rally, and then we would go down and retest the low, which is not far below. But the question is whether we are going to continue down with the double top breaking down with a target in the 110.17 to 110.12 range. And I think there's a pretty good chance, again, that will happen. One thing that didn't happen last year was that I was saying it might be that the Trump administration was supposed to be fiscally responsible by trouble in the bond market, and that didn't happen. But the thing is, of course, they've not been fiscally responsible. Borrowing is going up. It's accelerated, as it did under Trump 1.0 as well, and that's going to cause trouble. And it's already causing some trouble, and it's causing a degree of capital flight away from America. There are other reasons for that too. The Japanese have now actually managed to get their economy to the stage where their interest rates are no longer at zero, and they're up over 2% now, and that means a lot of Japanese money. Of course, they're one of the biggest holders of treasuries. One reason they were holding treasuries was because Japanese government bonds didn't pay anything. Some of that money is going to be going back. The yen carry trade is going to be unwinding. There are big implications, but I think a lot of that is going to be negative for the dollar and certainly negative for bonds. So I'm still very much liking these targets below, and I think these look like bearish patterns, which will resolve downwards. All right, looking at CL. Still leaning towards seeing another retest of the low. At the moment, not really seeing anything to contradict that, although not sure what this is really. Could be a bull flag forming potentially. HO, we had a double bottom, it broke up, it failed. We've now got a potential larger double bottom, which is showing no signs of breaking up. On RBOB, looks like it wants a retest of this low here in the 1.68 area. On NG, we had a decent looking IHS here, it broke up and it failed pretty spectacularly. So this looks as though it's going to need a retest of this low here in about the 3.46 area, and I'm expecting to see that soon. All right, looking at GC. GC, this is a nice looking little level bottom, and I'm thinking, well, I'm pretty bullish on precious metals this year. I think this is one, as people become warier of the dollar and American bonds, I think this is one of the attractive targets. I think we've been seeing a lot of that, and I think we've seen very encouragingly the other precious metals, palladium, platinum, and silver, very much swept up in the same thing. Silver, of course, reached a pretty amazing 82 last week. This looks like a bull flag forming. Palladium. We have actually a double topped here, which is broken down with the target in the 1380 to 1450 range, but we also have a falling wedge here that's broken up. It could be that it's just going to retrace and go down to that target. It could be that we're just going to fail back higher here. We will see. Platinum doesn't have a target to the downside. Does kind of look like a flag here, although I don't have a really nice support trend line that I could see. Maybe. But it doesn't really absolutely need one. It's just reassuring to see as and when we do. Actually, that's not awful. All right, hang on, I'm going to leave that in. Actually, that's not bad. This could be a bull flag. If so, we may be breaking up towards a move. I mean, this has started to look like natural gas in terms of the moves. More of a consistent trend, but in terms of we come down from a high here at 2580, which of course was us making the original IHS target I announced a few months ago, and we got all the way back to 1925. That's one hell of a move. I'm thinking it could go back just as fast. HG, I think this is a bullish consolidation before we come back and retest this high. Keeping an open mind, week 6 minute buy signal as reached as possible near missed target. Okay, what have we got on the currencies? We got a nice looking double top here, which is very supportive of the dollar going up if that double bottom is going to break up on there. We've also got a rising megaphone, which has broken down. Now, it doesn't need to deliver more than the retracement, but actually, with this head and shoulders, if this double top actually broke down and made target, I think that would probably be less than the 61.8 retracement. I think that looks extremely doable. GBP USD, I was talking about the rising wedge here, which had overthrown, and this has broken down now. Obvious move would be to follow through to the downside to whatever degree. USD JPY, we've got unfinished business above. USD CAD, Just making target on the 60-minute buy signal at the moment. We've got potential for bottoming here, but I wouldn't describe it. I wouldn't go so far as to call this. Oh no, I would. All right, check that out. That is nice. Sorry, I haven't marked that on the charts for this morning, but it'll be on the ones tonight. That is an IHS which has broken up. And it's nice. So we've got support there too. I'm liking the dollar higher. I am thinking we wasted a long time last year not playing out that big bull flag setup on the dollar, and I think that makes it more doubtful it is going to break up and make that target. So, but we'll see. It hasn't yet failed, but I'm thinking it's. I'm thinking we wasted a good opportunity last year to go up to do that, and much as it's a really nice setup, I'm thinking it's less likely to make target now. All right, Australian dollar. Not a lot to report. KC. This looks like a bear. Well, this is a beautiful bear flag channel, and it's broken down. And the obvious target is a retest of this low here at about 338 area. Looking at sugar. Sugar. This still looks like an overall bear flag forming. We almost made it to this double bottom target in the 15.43 area. Haven't quite made it. Maybe we're not going to. This looks overall like a bear flag, and lumber looks like a bear flag too. CC, we had a little IHS, double bottom that broke up here with a target in the 64.30 area. That's almost failed and may well fail. But the double bottom hasn't failed. It could still make target, but it's showing no indication of doing so. We could be forming an overall bull flag on CT. CT still got a very nice looking double bottom, which still hasn't broken up yet. On ZW, this looks like it's going to retest the low. That could form the second low of a double bottom as when we get there. On corn, obviously, he hasn't been making much progress towards the retest of this high here at 457. Still looks like the obvious next target, though. On ZS, I was looking for a retest of this low, possible double bottom there, but at the moment, we are just, we've made it so far, and we're just continuing down. Obviously, the Chinese still haven't bought any soy. So all of this move up was basically on the deal that the administration made with the Chinese, and this decline is mainly about that not appearing. I think the Chinese bought a little, but they didn't buy an awful lot. And at the moment, there's no particular sign of them buying more. On soybean oil, we had an IHS, double bottom that broke up, and that looks as though it's failing back into a retest of the low. Live cattle looks like a bullish consolidation, could be a double top. But it's looking more like a triple or quadruple top at the moment here, and those don't actually exist. I think this is probably likely to break up. Decent support, obviously, at the monthly pivot at 226. HE, we've got a slight break of this rising support, but nothing really convincing in terms of topping pattern. As long as it holds monthly pivot at the new monthly pivot at 83.64, I'm liking the upside on this. And we've got a double bottom, which is broken up with a target in the 88.65 to 90.2 area. All right, great. Let's have a quick look at questions. Will the unwind of the carry trade basically devalue risk assets? Yes. But most of all, it will provide downward pressure on the dollar and on bonds. I think because the carry trade really is recycling into treasuries. So if it recycles out and the Japanese start holding less treasuries, then borrowing is going up and demand for dollars and demand for treasuries appears to be going down and has been going down. We shall see. If SI is making a bull flag, are we expecting one more leg to support line before breaking on up? Not necessarily, no. Hang on, let's have a look at it. This could be the support line, although I would say I haven't got a decent looking trend line there. Ideally, we do this and go down to about the 67 area or slightly below and do it. But having said that, we've just broken up over this declining resistance here, so there's no need for it unless we are forming an alternate resistance pattern. I'm thinking this could go straight up, but there is a possibility, yes, of going down and forming a better bull flag with a leg down. But notice, of course, where we're finding support. The new monthly pivot at 70, support there. It's not breaking. For it to get that would need to break. So we shall see. All right, guys. Anyway, I will have a post out today. So in the next 2 or 3 hours, talking about the setup that I've been talking about here, where we break below the daily middle bands. So it's either continuation or rejection generally. I'm leaning towards rejection back up. And I'll be talking about that in the post. All right, everyone, take care, and I'll catch you guys again on Monday. Cheers.